Hello everyone, my name is Andrea and today we're diving into our latest trading session. As some of you may know, I'm a market analyst here in HFM. So today I'm gonna focus on two crosses that trigger my attention today. Remember that today it's the very last trading day of the quarter, of the month, of the week as well. I know that there is still Monday, which is the 30th of September indeed. However, it seems that there is a lot of repositioning today in the markets because on Tuesday we're gonna be in a new quarter, in a new month as well. So as you might know, this triggers a lot of taking profit conditions, repositioning of portfolios, and that's why we have seen some sharp moves today. So as I said, I have focused into two crosses. One is cable, and the other one is pound yen. Okay, so it seems that today the dollar is facing a bit of a pressure. That's obviously due to the aggressive market expectations for the rate cuts, the improving global growth prospects, especially after we have seen easy measures from China. So it's a balancing, let's say, act between global growth, which is boosting the risk sentiment and weighs on the dollar and the aggressive rate expectations that may be adjusted if U.S. economy. If the U.S. economic data begins to show improvement. So, let me, here I have, as you can see, the cable, okay? So, okay, here we are. This is the 4-hour chart, okay, guys? And what triggered my attention, this is cable, here we are. In a 4-hour chart, it has been to the upside since the 10th of September, okay? A nice trend, and I connected the higher lows, as you can see. So I'm gonna zoom in a bit so you can see that currently, after it retested the trend line, it seems that it's trying to push higher and is currently at 133.95, ready to test once again the 134 level, or even to return to the highs that we have seen the last 2 days. It overall maintains its gains. Okay, so if I flip up to the daily chart, you can see that it maintains the highs that we have seen in September. Let me zoom out a bit as well so you can see everything. You see, it has been to the upside since March. Higher high, higher high, higher low. So seeing that the September's gains have been well sustained, okay? So the momentum, as you can see over here, is still increasing higher. Bullish momentum, you can see it from the MACD as well. So in general, we have a positive overall outlook for cable over here. From a risk management perspective, though, we can see that. Let me go back to the. We can see, okay, back to the 4-hour chart. So you can see that it seems that the buyers have a more favorable, let's say, risk to reward setup around the 130 to 60 territory. So that's the line that I draw over here. Basically, it used to be a very strong, decisive resistance level earlier in August, and this is where we've seen some buying the dip conditions last week that lead to 134.30 level. So there was as I said, quite a favorable risk and reward setup at that support zone. So that support zone is something that you should keep put in your charts in case we see a break in the near future of this trend line, a move below this trend line. For the time being, it seems that is well supported. As you can see, nice and smooth, it moves higher. So you can identify in this 4-hour chart that this trend line pretty much defines the current bullish momentum. So every time that this trend line is being retested, we can see that buyers rely on it, and they continue this uptrend. Sellers, on the other hand, will be looking for a downwards break to reinforce their bearish strategies, targeting initially this trend line, and if and only if we see a confirmed breakout of this trend line, this might lead down to the previous swing low, which is the 133.10 level, and to the key 132.62 level. So keep an eye on that, okay? It's been the momentum is the bit in the 4-hour chart, but as long as the trend line is being maintained, the outlook remains positive, with any pullback indicating a rebound and a continuation to the upside. Also, we have a double top over here at 34.30. So have in mind that for next week, if we see a break of that level, okay, then the doors could open for, here we are, 134.50, 134.80, or even the round 135 level. So use your Fibonacci's, use your indicators to find any potential trigger points. Now, last but not least is the pound yen. I posted it earlier in Telegram today. There was a huge pullback this morning into the European Open. However, the momentum is still positive, okay, for our chart as well. Momentum is still positive, and as I mentioned in my Telegram this morning, as long as the 191.70 or even the 191 territory maintains as a support level, I mean, if the asset doesn't manage to extend below the 191 territory, then we still see an overall positive outlook. So currently it's at a very, very crucial level. After the dip, is settled above 191, okay, and it's consolidating between 191 and 190.70 territory. You can see that there is a lot of indecision over here, sideways move. So you need to keep an eye on this zone over here, especially into the US Open later on, and especially in the Sunday Open. So everything will get clearer by next week, of course, but any further dip, and more precisely, a persistent move below 191 could indicate a potential reversal of this September's rally. So that could literally open the doors to 189 territory. And more precisely the 189.89.50. It was a very important support level back in August, so this is back in play if we see the 191 level breaking. So also, last but not least, of course, here we are, let me just be precise. You can see that these levels are in line with the 38.2 Fibonacci level and the 50% Fibonacci level. However, this still seems unlikely because momentum is still bullish, okay? So on the flip side though, a return back to the 195.90 level could be only seen if we have a return of pound yen back above 192.50 level, okay? So your latest swing high, oh sorry, my bad. Okay, here we are. You need to keep an eye on this resistance level, but to be more precise, a better trigger point will be the mid of this dip. So I put the Fibonacci just to find the mid of this decline that we've seen earlier. So let me just delete this. So this is halfway, 193.40, 193.38 to be more precise, is halfway. This decline is also our previous resistance level. So the asset could continue its uptrend and could continue moving above 195 if and only if we see a return of pound yen back above 193.40 territory. That was pretty much from me, guys. I would like to thank you for watching. Have a great weekend ahead. Take care. Remember to trade based on what you see and not what you think. Put some trend lines on, put some support and resistance levels, set some alarms to keep you up to date with any breakouts. We're gonna speak again soon, basically next week. Have a great day ahead. Have a fantastic week ahead and see you again next week. Thank you very much.